Welcome to the deep dive. Today we're jumping straight into Astera Labs Q3 2025 results.
Yep, the numbers, the guidance, and what it all means for AI infrastructure. Let's unpack it.
Okay, Q3 ending September 30th. Definitely a record quarter. Revenue hit $230.6 million.
Which is huge. I mean, look at the growth rates there.
Exactly, up 20% from just last quarter.
And, well, the year-over-year is the real kicker, right?
Yeah.
104%.
104%. That's staggering. It points directly to this AI boom needing their specific parts.
Absolutely. It's not just general growth, it's specific demand. The CEO, Jitendra Mohan, basically said as much.
Right. He linked it to robust demand and upside across our signal conditioning, smart cable module, SCM, and switch fabric portfolios.
And the key phrase there, as new AI platforms ramped up production, they're riding that specific wave. These aren't optional bits.
Okay, but growth like that, sometimes profitability takes a hit, right? How do they manage on that front?
Well, that's the other remarkable part. The efficiency looks almost like a software company, not hardware.
How so? I mean, the GAAP gross margin was 76.2%. That seems incredibly high for components.
It is incredibly high, and it tells you about their position. They're not selling commodity parts here.
Explain that a bit. Why such high margins?
It's the IP, the specialization. They focus on high-speed signaling, PCIe, CXL, the really tricky stuff inside these dense AI racks. Think signal integrity.
Okay.
Their solutions, like the Scorpio switch fabric, they solve very specific, complex problems that others can't easily replicate, so they command a premium. It's less about manufacturing cost, more about the value of that unique IP. They've carved out a niche.
Got it. So that niche justifies the gross margin. What about further down, like operational efficiency? The non-GAAP operating margin was really high, too.
Yeah, 41.7%. That's $96.1 million in non-GAAP operating income.
Over 40% operating margin. What does that signal?
Tremendous operating leverage. Basically, once they design these products, the cost to sell more isn't proportionally high. Each additional sale drops more profit to the bottom line.
Yeah.
They've built a model that scales incredibly well as volume ramps up, which is exactly what's happening with AI builds. That figure separates the long-term players from, the ones who might get squeezed later.
Okay, so Q3 was strong. Let's turn to the future Q4 guidance. This is what the market watches closely. They're expecting more growth.
They are. Continued sequential growth. The revenue forecast is $245 million to $253 million for Q4.
Still climbing. And did they say what's driving that continued momentum?
Yep. Management specifically called out continued PCI 6 momentum and also robust growth from our Taurus Ethernet SCMs.
Let's pause on those PCIe 6 Taurus Ethernet SCMs. For listeners, what exactly are these things doing inside an AI system?
Right, good question. Think of all the GPUs in an AI cluster needing to talk to each other super fast. PCIe, CXL, Ethernet, these are like the data highways.
The communication backbone.
Exactly. But at really high speeds, like 100 or 200 gigabits per second, especially over copper cables, the signal degrades quickly. It gets messy.
Physics gets in the way.
Physics gets in the way. Astera's SCMs, the smart cable modules like Taurus, are basically active electronics inside the cable or connector. They clean up, boost, and manage that signal.
So they make the connection work reliably at higher speeds or longer distances than it normally could.
Precisely. They're active components making passive copper work harder, essential for scaling these massive AI racks.
Okay, that makes sense. Now let's tackle this GAAP versus non-GAAP thing in the Q4 guidance. It's confusing. GAAP EPS is projected around $0.20, but non-GAAP is way higher, like $0.51. Why such a big difference?
Yeah, that gap is significant, over 150%, and the report is pretty clear on the reason. It's almost entirely down to excluding stock-based compensation, or SBC, from the non-GAAP number.
Stock-based comp, let's quantify that. GAAP operating expenses are guided up to $134 million. Non-GAAP OPEX is guided much lower, $85 to $90 million.
Do the math, that's potentially $44 million or more difference in one quarter, just from stock-based compensation.
Wow. So what does that huge SBC number tell us strategically? It's not just an accounting footnote then.
Not at all. It's a massive investment in talent. In this very specialized field, high-speed interconnects, chiplet design, the engineers are incredibly valuable and scarce. You can't just hire them with salary, you need to give them equity, especially when your Stark is performing well thanks to the AI wave. This high SBC shows Astera is aggressively using its stock as currency to attract and keep the key people who develop this critical IP.
So it's the cost of winning the talent war, essentially. A strategic investment disguised in the expense line.
Exactly. It's a bet on future innovation funded by current success.
Okay, so they've got strong performance, solid guidance, and they're investing heavily in talent. How are they using this strength strategically? There was a big acquisition announcement.
Yes, the deal to acquire Scale Photonics. They make fiber optic chips.
Fiber optics, interesting. Their current success is mostly in copper, right, with those SEMs. Why move into fiber now?
It's about the next step, the future-proofing. As we said, SEMs push copper to its limits. But when you need to connect racks across longer distances or go to even higher speeds in the future, fiber becomes essential. Copper just won't cut it physically.
So this isn't abandoning copper, it's adding another tool.
Exactly. It ensures they can serve customer needs, whether the solution requires advanced copper or fiber optics. Mohan said it's to support our customers' technology roadmaps and expand beyond copper interconnects. They don't want to lose a customer just because the physical medium changes. It keeps them central to the connectivity problem, regardless of the solution.
Makes sense. Beyond buying tech, they also seem to be heavily involved in partnerships and standards. That OCP Global Summit sounded busy for them.
Very busy. This is maybe the most important long-term strategy piece. They're not just selling parts. They're trying to shape the whole ecosystem around open standards like CXL and UA-Link.
And they announced collaborations with some huge names.
Yeah, look at the list. AMD, ARM, Cadence, Molex, Quanta, Synopsys, TE connectivity. That's silicon designers, EDA tools, manufacturers, system builders, the whole chain.
When you work with all of them, you're basically helping write the blueprint for how things get built next, aren't you?
That's the goal, and the really crucial part of that is joining the ARM Total Design Initiative.
What does that involve? How does Astera fit in there?
Okay, so ARM Total Design is meant to make it easier for hyperscalers, primarily, to build their own custom chips, their sulcacs, using ARM's Neoverse core.
Right, custom silicon is a big trend.
Huge. And Astera's role is providing their intelligent connectivity platform, basically their validated chiplet IP for things like PCIe and CXL directly within that ARM design ecosystem.
Ah, so if a hyperscaler uses ARM Total Design to build a custom AI chip.
Astera's connectivity solution is right there, pre-validated, ready to be integrated. It saves the hyperscaler enormous time and risk in developing and testing that complex connectivity piece.
That sounds sticky. It embeds them really early in the design process.
Extremely sticky. It moves them from being just a component supplier to being part of the foundational IP for these next-gen custom AI platforms. It's a powerful competitive advantage.
Okay, let's pull this all together. If you're trying to understand Astera Labs' position right now, what are the main takeaways from this deep dive?
First, Q3 wasn't just good, it was confirmation. Confirmation that their specific connectivity tech SCM switch fabrics is absolutely critical for the current AI build-out. The massive growth proves it.
Right. Demand is real and accelerating. Second,
the Q4 outlook shows this isn't slowing down yet. And crucially, the financial structure, high non-GAAP margins paired with that heavy SBC investment reveals their strategy. Leverage current profitability to lock down the talent needed for future dominance.
profitability funding the talent war. And third,
The strategic moves are key. The Scale acquisition hedges against the limits of copper by bringing fiber into their portfolio, and the ecosystem play, especially ARM Total Design, aims to embed their solutions at the blueprint level for future AI systems. They're playing the long game.
moving from just selling parts to influencing the architecture itself.
Exactly. Component seller to foundational partner. Hashtag outro.
So hopefully this deep dive gave you a much clearer picture of Astera Labs' financial health, their strategy, and why they're such a key player in the AI infrastructure story right now.
And maybe one final thought for you to consider. Astera has built this impressive web of collaborators. AMD, ARM, Quanta, Wistron, Cadence, Synopsys, you name it. If this push towards open standards and pre-validated solutions through things like ARM Total Design really takes hold, how quickly could it disrupt the current, often very proprietary ways hyperscalers design and build their massive AI data centers? Could we see a faster convergence towards standardized rack-scale AI building blocks?
Something to think about. Thank you for joining the deep dive.